464 points. Today's bear market was part of a worldwide stock sell-off. Our Mike Pesina joins us now with more on what some investors have to say about the unbearable story. Mike.
Well, Eric, it's a roller coaster ride that investment experts say is just another ride, but others are worried about what the feds are doing.
As the opening bell rang Tuesday morning, the stock market numbers on all screens reflected what the overseas markets were doing, selling. Heavy overnight losses in Asian markets triggered the early sell-off, and experts say this happened as fears spread over a possible U.S. recession. Before this, the Federal Reserve cut a key rate by 3/4 of a percentage point, the biggest one-day move by the central bank in recent memory. Does this mean we are in the midst of a recession?
I wouldn't want to call it a recession yet, okay? Generally, recession is defined as 6 months or 2 quarters of decreasing growth, or GDP, as we call it, gross domestic product. And we certainly haven't seen that yet.
So what effect will this have on those of us with portfolios?
It will have a direct impact on money market account yields and certificates of deposits 1 year or less.
What about our 401ks?
That varies. There's no direct correlation, so to speak. In other words, if the Fed comes down 0.75%, does that necessarily mean money market accounts will come down 0.75%? It's not true.
So is this move by the feds a good thing or not?
I think it could help. I mean, the problem is, in economic terms, we could get into what's known as a liquidity trap. A liquidity trap is where we lower interest rates to such a degree that we can't lower them anymore.
So in the end, Tuesday's low market numbers were only an opportune moment for those in the market to buy stocks, according to experts. The Dow finished down 128 points, closing trading at just under 12,000. Mike Pesina, 3 News.